So this is topic number 7. It's an FRA topic, a BDA topic as well. Very, very important for students who are doing business data analytics as well. So it is topic number 7 under FRA. The topic's title is Analysis of Financial Statements. And I was trying to explain, they simply want us to show you how do we interpret financial statements using what we call ratio analysis and what we also call common size financial statements methodology. So we shall be computing ratios, we shall be doing what we call common size financial statements. And the question that I will be doing, which I would want all students here to download, as I do the introductions, I'll be doing the introductions shortly. So as I do these introductions, I would expect all the students in this case here to download this question paper. Yeah, so this is what I want my students in this case here to download. Yeah, it is August 2022, question number 5B. August 2022, question number 5B from the FRA past papers. So as I do my introductions, by the time I'm reading this question, all the students should be having access to this question. August 2022, question number 5B, FRA. Yeah, so then the questions, not questions, but the notes that I'll be using, which I would now want to share here. These are the the notes I'll be using, Yeah, ratio analysis. It is a must-come area in your exams. Yeah, could you kindly confirm that you've been able to see under the charts, whatever Mwalimu has shared there? Under the charts, are you able to see what Mwalimu has shared there? And are you able to download this? And most importantly, share it within ourselves in our respective WhatsApp groups. That will make me very, very happy. Yeah, also Njoki is making a request of somebody, in this case here, being able to share, being able to share the question on WhatsApp. Let me see whether I can get it. As you guys as well download the question that I'll be doing, not question, but notes, which I'll be using there. All right, gentlemen, great. What an interesting afternoon. So have you been able to download those notes, my great students? Have you been able to download those notes, yes or no? Yes or no? Separate chat, okay, let's try. Oh, don't go to WhatsApp. There is something I've shared here. There is something I've shared on these chats. There is something I've shared on these chats, which you're supposed to just download. There is something I've just shared, on these chats that you should be able to download and get to read. Of course, with me. So the question that I will be doing, I've been able to convert it to Excel for the sake of the BDA students. So the BDA students have been able to convert this question to Excel very fast, thanks to technology. Yeah, so I've shared it there. And also the morning class, BDA morning class 2025. So I've shared that with you. I can see now, no worries. So then here we start. Mwalimu will start right away. I start, ladies and gentlemen. Like the class now is doing very well, although we can still do better. We are at 80. All right. All right. So this is so I hope all of you are able to see my great screen. Yeah. So of course, for those of you who have never met this Mwalimu, my name is Dr. Joshua Aura. I teach at RCM Online College. We are accredited by CASNEP fully, and our students in this case here get to enjoy all the CASNEP benefits, including the HELB loans. If you will be interested to talk to us regarding HELB loans and other matters, this is our number here. So today I'm looking at chapter number 7, analyzing financial statements. And we shall start with the analysis of these financial statements using the famous ratios. So ratio analysis involves interpreting financial statements using various financial ratios to assess an organization's performance, in terms of profitability, efficiency, how efficient are we, for example, in terms of collecting our debts, liquidity, solvency, and profitability. So we start with the profitability ratios. So I've given you all the formulas and the purpose of each of these ratios. If it is GPM, how do we get gross profit margin? We take the entire gross profit, we divide this by revenue, change it to percentage. And this measures the profitability before any indirect costs. Measures profitability using the cost of sales only. You see, for us to get gross profit, we take sales revenue minus cost of sales. Before you start looking at indirect costs, get that gross profit that you have there, you divide it by sales revenue, there you will be. Then we have net profit margin. Once you hear the word margin, we must always have revenue at the base. So we have a net profit margin, which is net profit over revenue. We have return on assets. Which returns are these? This must be the profit after tax, the net profit over total assets. We have return on equity, the same profit after tax divided by the shareholders' equity. We have famous liquidity ratios. I'll just move fast because I'll be doing a question, which you'll be able to see how the formulas are being applied. So allow me to move with speed just to explain this. Like now, current ratio, which is one of those best liquidity ratios. To get current ratio, we normally take current assets over current liabilities. How about quick ratio? Pretty similar to current ratio, except the fact that for quick ratio, we deduct inventory, because you see it's not easy for you to convert inventory to cash. So you deduct, in this case here, inventory out of current assets. And then, of course, you divide this by current liabilities. Then now we have the cash ratio. Cash ratio amongst these current assets, under the cash ratio, we take cash and the cash equivalents only. And then we divide by current liabilities. Now, my good students in finance, whenever you hear of cash equivalents, what comes to your mind? Please talk to me. Whenever you hear of cash equivalents, what comes to your great mind? What are cash equivalents? Could you kindly give me examples of cash equivalents? Because you must be able to identify them from your financial statements. You must be able to know how to identify them from the face of your statement of financial position. So what are cash? Thank you so much. I can see charts here. So they're telling me, Mwalimu, these cash equivalents, these are short-term investments. Sylvia, no. Cash in hand is not a cash equivalent. That is the real cash itself, right? So cash equivalents, basically these are the short-term investments or short-term deposits. Short-term investments or short-term deposits. For example, when you deposit your money in a money market fund, an MMF, that's a cash equivalent. Because at a short notice, like 2 or 3 days, you'll be able to get back your money to your bank account. Great. So investments that can be converted to cash within 6 months. 6 months is quite high. Cash equivalent means that within 4 or 5 days, you should be able to get. You should be able to get what? You should be able to get back your cash. Great. Then we go to what we are calling efficiency ratio. You'll be able to see this in inventory turnover, etc. As I do a question, it will be easier for me to explain this. we have the solvency ratios, the gearing ratios. These have everything to do with debt. Whenever you hear of a solvency or gearing ratios, we shall be talking about debt, things like interest, etc. Then we have what we are calling 7.2, analyzing financial statements using the common size approach. The common size approach expresses all items in the financial statements as a percentage of a base figure. For profit and loss, what will be the base figure? What will be the common item in all the values we shall be analyzing? For P&L, the common or base figure will be revenue. And this is how we shall be doing this common size P&L. So if you're given profit and loss statement, just a simple one like this, and then they want you to do a common profit and loss statement, what you will do, you will get all these values as a percentage of revenue, because revenue is your base. So like the first percentage, you will take 10 million, because this revenue, over 10 million times 100. This one, as a common base, will be 6 million over 10 million times 100. Everything, you divide this to the common, you divide this by the common base. Our common base is revenue. So under common size statement of profit or loss, each item will be shown as a percentage of revenue. Each item, if it's this operating expenses, 2 over 10 times 100 is 20%. If it's net profit, 2 over 10 again, like that. Yeah. So in this case here, how about the common size statement of financial position? Each item is presented as a percentage of total assets. Yeah, example format. So you have here the total assets in your statement of financial position as 20 million. Yeah. So we start with the percentage of total assets to assets. So like the first one will be 20 million over 20 million times 100%. 100. Cash, 2 million. So as a common item to the base figure, and the base figure here is total assets. Everything, every item will be presented in a form of the base, like that. Yeah. So this will really be very helpful, and for us to be able to understand, I mean, get some insights out of whatever Mwalimu has been discussing here for the last 10 minutes. I would want us to go to the past papers directly. And I would want us to start with this August 2022, question number 5B. For the BDA students, I've been able to send to you the Excel format of this. But for the FRA students, we are yet to get into that level of BDA. We shall open this question. We do it together. BDA students, have you been able to download that question onto your machines? August 2022, question number 5B. BDA students, have you been able to download what I've shared with you? Yeah, great. Thank you so much. The only thing you haven't done for me is to tell your colleagues to come and join this very important class. I don't know why you don't want to share this with them. Tell them the class has begun. They need to join us like immediately, like now, especially when I start doing this question. FR students, have you been able to get this question? August 2022, question number 5B, FRA students. FRA students. Yeah, these young ninjas, great. Thank you so much. So I read from our revision kit, ladies and gentlemen. We are told here, this August 2022 question, we are told that Dragon Limited is a public entity which has grown in recent years by acquiring established business entities. The directors of Dragon Limited have identified 2 potential entities targeted for a takeover. The directors believe that the shareholders of the 2 target companies would be receptive to a takeover. As a prerequisite to the takeover decision, the directors have tasked a firm of consultants to carry out a cross-sectional analysis of the financial statements of the 2 potential target companies which operate in the same sector. The financial statements of the 2 entities at 30th April 2022 are shown below. Great. So you're told here, I can see the P and the L. The P and the L, yeah, for the two companies, Able and the Cedar Limited. Then I can see the statement of financial position for the two companies again, Able and the Cedar Limited. So they want me to give them common size statements of P and L for the two entities for the year ended 30th April 2022. All right. So we start with that one first. We start with the common size P and L. Profit and loss. Very easy. So we copy for the first company. So we have here Able Limited, P and L for Able Limited. So we have revenue. We have cost of sales. We have gross profit. We have distribution costs. We have administrative expenses. We have operating profit. Of course, the BDA students are very lucky because we are not copying anything. You guys are not copying anything. Already you have the question. So we have operating profit. We have finance costs. We have a PBT, profit before tax. And then we have profit for the year. Our PAT, profit after tax. So what I will do, because my board is just a clean sheet, I'll be forced in this case just to put lines for the sake of you being able to follow. So then we have our revenue for Able in shillings thousands. I can see 87,500. I can see 66,500. BDA students are not copying anything. BDA, you already have the question paper. 21,000. This minus this gives me 21,000. Then I can see 1495, 2880. The two are being deducted to give us an operating profit of 16,625. 16,625. Of which I can see the finance cost is 875, giving me a profit before tax of 15,750. 15,750. And then we have here 3150, the tax, giving us 12,600. So the FRA students, have you been able to copy this? FRA students, have we been able to copy up to here? FRA students, have we been able to copy? Thank you so much, Carol, for sharing that Excel. Yeah. So then after reaching here, ladies and gentlemen, I would want us to come and do our common size, P and L for Able. Common size, P and L, Able. So remember that this basically will be a percentage of revenue. Everything to be given as a percentage of revenue. So let's first of all finish for Able. CS stands for common size. Common size, profit and loss for Able. Yeah, so like the first one, this will be 87,500 over 87,500. Whatever I get, I multiply with 100. Whatever I get, I multiply with 100. So of course, the first one will give me 100%. The first one will give me 100%. Because you see the base revenue is 87,500. So all the numbers here will be divided by 87,500. So when I go to the second one, I will take 66,500 over 87,500 because it's a percentage of revenue. All the items as a percentage of revenue times 100. Times 100, please give me your answer in 2 decimal places. In 2 decimal places, Irene is giving me 76%. Is that okay? Irene is giving me 76%. So is that okay, my good students? Yes, 76%. So we have here 76%, like that. So remember, don't even capture it as a negative. No. You come to each item. Each item, it will be 21,000 divided by 87,500. Yeah, times 100. Tell me in this case here, what do we have there? Yeah, can as well take this minus this. So this gives us 24%. 24% like that. That gives us 24%. So for the BDA students, I'm so sure by now you must have picked that this 87,500 is a constant feature. And if it's a constant feature, as I'm doing my divisions downwards, I need to lock it. The BDA students, do you remember how to lock figures? Is there somebody who remembers how to lock? Because what you'll do as a BDA student, you'll come and take like the first one. You'll say it's 7,500, you divide by this cell. You say this one divided by this 87,500 cell. But this number now has to be locked. This has to be locked. It has to be dollarized. It has to be dollarized. Yeah, it has to be dollarized. And once you've done that for the BDA students, you'll simply be able to hold on to our rabbit. And then you scroll down. And then you'll be able to get all the answers correctly. All the answers correctly. Is there somebody who has been able to do that? BDA student who has been able to do exactly that? As the FR students struggle now to get all the others, do we have any BDA student who has been able to do that? Because you dollarize using the F4, if you remember, using the F4, using the F4, using the F4, you dollarize using the F4. Those BDA ninjas who have been able to do that, can you kindly share the screen with us? Share the screen with us. Share your screen with us. We get to see what you're doing. We can even give you a present. Share the screen with us. The BDA students who have been able to do this. Working it perfectly. Great. Great. Please share your screen with us. Share your screen with us without fearing anybody. And of course, I presume that the FR students are really on their way to finishing. Yeah, great. He has already been able to do for the 2 companies. You can see. Thank you so much. Thank you so much. You're a great ninja. You're a great ninja. Thank you so much. Thank you so much. Thank you so much, Pius. Great. So advanced yield. Now, ladies and gentlemen, for the sake of my FRA students, are you able to give me these percentages downwards very fast? So like this will be 1495 divided by 87,500. Yeah, 1495 divided by 87,500. Remember everything, you're dividing everything by 87,500, isn't it? Everything by 87,500. So I'm being given 1.7%. 1.7%. Then you come and give me this 2880 divided by 87,500. 2880 divided by 87,500. What are we getting, ladies and gentlemen? 3.3%. Thank you very much. 3.3%. And then we go straight away to operating profit, where you take this figure divided by 87,500, or this, it doesn't matter. Just take everything divided by everything. So 19%. So we have here 19%. Then we have a finance cost, 875. 875 divided by this, because this is the base, the common size, 1%. So this is 1%. Then we have here 15,750 divided by the base, divided by the base, divided by the base. So this is giving me 18%, 18%. And then we have 3150 divided by 87,500. 87,500. So this gives us 3.6%. 3.6%. Then lastly, we have the profit for the year as a percentage of revenue. As a percentage of revenue will be this divided by this times 100. Times 100. Times 100. So then that gives us 14.4%. So ladies and gentlemen, writing this basically was for me for demonstration purposes. Yeah. The FRA students, you don't have to copy this the way it is, no. So I want you to go ahead and give me the common size for CEDA. The common size P and L. Common size P and L for CEDA directly. For CEDA directly. Is there somebody who is able to see the baseline for CEDA? What is the baseline for CEDA? The baseline for CEDA, ladies and gentlemen, is the revenue given there for CEDA. For CEDA, 140,000. Thank you so much, Irene. So then for this one, of course, you start with 100%. So for the first one, it will be 140,000 divided by 140,000 times 100, which will be 100%, which will be 100%. Yeah. So Farrell, I don't know where you got 82 from, or are you giving me the second one? Yeah. The second one, I can see the cost of sales, 114,800. So 114,800 divided by 140,000 times 100 times 100, 82%. Thank you so much. Thank you so much. Yeah. Now you can see in this case here, in terms of the cost of sales, I can see using the common size, I can see that the cost of sales for CEDA is higher. It's at 82%, and therefore ABO, it's at 76%. So I need to ask myself, how comes CEDA has a higher cost of sales? And I'm able to see that the increase in the cost of sales for CEDA is attributable to a higher revenue. Because you can see revenue here for CEDA is 140,000. This one is 87,500. So you can't say that simply because cost of sales of CEDA is higher, all right, that we are doing badly. No. Also, the revenue is quite high, but you should be able to look at that as we progress. Ladies and gentlemen, please go ahead and give me the answers for the rest of the numbers. For the rest of the numbers, there is somebody who is asking for help there. Let's help this ninja. Let's help this ninja. The FRA students who are here, are you able to follow what Mwalimu is doing? FRA students who are around here. Thank you so much, Cyprian. Thank you so much. Great. It's easy. It's very easy. And they brought this question last semester. Yeah. So in this case here, then give me all the answers now downwards. Give me all the answers downwards. Then we get to compare what is happening here. Yeah, so Cyprian is giving me 18% here. Yeah. So please go to the next one in terms of distributions. Elston has just joined. So Elston, no worries. You will be able to understand. It's very, very easy. We are doing, first of all, Elston, we are doing this August 2022 question 5B. Do you have it? Do you have this August 2022 question number 5B? I just summarized for you very fast. This is the question we are doing. August 2022 question number 5B. You have it? Yeah, once you get it, let me know. Once you get it, let me know. I'll be able to summarize this for you very fast. You're not late, really. We've just begun. So please go to the next one. 12.3. 12.3%. Go to the next one. 2.3%. 2.3%. 2.3%. 2.3%, 10%, thank you very much, 10%, 10%. Then we have here 2.5%. Then at the very last, what do we have, ladies and gentlemen, as the profit for the year? 7.5%. 7.5%. 7.5%. Yeah, 7.5%. So I'm waiting to hear from that ninja. You can actually even send that question here for this ninja called Liston Eli, so that I can just explain to him very fast. We don't love leaving anybody behind. We shall never leave anybody behind. We shall cross the bridge, by the name of, by my name, Joshua. I should be able to help you, in this case here, cross to the promised land, right? Yeah, I should be able to help you cross to this promised land. Yeah. So I'm so sure like the BDA students must be really bored because, you guys are using a system, isn't it? When you're using a system, you're wondering, why is Mwalimu explaining? Because you finished long time ago. So for those students, can you kindly go ahead and give me the common size statement of financial position? Go ahead and give me the common size statement of financial position. Basoga has gotten it great. And I can see Basoga has decided to change his name because he must have realized I'm struggling pronouncing his name. Thank you very much, Basoga. We shall overcome. We shall overcome. Great. So then what are we doing in this case here, Basoga? What we are doing is basically what we call common size statement. Yeah, common size. So we look at the common item. Like in this question here, which is August 2022 question 5, when we are doing common size profit and loss, the common item, what we call the baseline for the P&L, will always be revenue. So basically what you shall do, ladies and gentlemen, is to come to your revenue, for example, for the first company called Able. For the first company called Able here. So Able's revenue is 87,500. So all the numbers that are given in the P&L will be divided by the revenue figure. So that's what we did. We started with this one, 87,500, divided by the same figure, gave us 100%. We came to the second number. It has to be presented in form of the revenue for Able. So 66,500 divided by this. 21,000 divided by, this is the common. This is the baseline for all the numbers. And then you say times 100. Once you get a few, and then Basoga will be able to, of course, now watch this video later on. Now, ladies and gentlemen, if you are the investor, in terms of these profitability ratios, which company will you invest in? If you're a potential shareholder, remember, shareholders are very, very greedy. Shareholders, they don't even want to look at like how the expenses structure are. These shareholders, they are always there to maximize profits. So whenever you are told, in this case here, to advise investors, potential shareholders, always look at the gross profit margin, the gross profit percentage here. You can see gross profit percentage, Able has a higher one, 24%, the other one is 18%. It doesn't matter how much sales you are making, how high the sales you're making here. We're only interested in the profits here. So in terms of gross profit percentage, Able is better. And then look at the bottom line. The bottom line is the profit for the year, the PAT percentages. So again, in terms of PAT percentages, we can see that Able is better, compared to 7.5. So then the shareholders here, the potential shareholders, should invest in Able company because it has a higher gross profit percentage and a higher net profit percentage. So in terms of gross profit percentage and net profit percentage, we should invest in Able Limited. They don't even want to look at net assets, etc. If it is shareholders, remember shareholders' main objective is to maximize their profits because it is out of this profit that they shall be able to get a dividend. So the size to them doesn't really matter. as such. What they're interested in are the profit metrics, specifically the gross profit margin. That is really very special for them. And then we have the net profit margin. Great. Able, thank you so much. Ladies and gentlemen, with your permission, then I'll be able to go and do a common size statement of financial position. All right. So under the common size statement of financial position, our base will always be equal to total assets. Look for total assets figure. Look for total assets figure. Let's start with able. Able. Yeah. So able. So we have our statement of financial position. It's given there. For Able Limited, is there somebody who is able to see the total assets? For Able Limited, is there somebody who is able to see the assets? So we have non-current assets. Non-current assets. So non-current assets, ladies and gentlemen, I can see property. Property. So property, Able is 3600, isn't it? And the property for Able, I'm seeing 9800. So it will be 9800. Divide this by the total assets you guys have given me, which are 33,600. 33,600 here times 100. What are you guys able to get there? 9,800 divided by that 33,600 times 100. Yeah, this is really an easy topic. It's a one lesson topic and everybody will be very comfortable. So Jules, 29%. 29%. Thank you very much. That is able. 9%. Then get to the second item here. We have owned plant. Plant. So plant, I can see there 7,000 divided by 33,600 is going to be common. It's the baseline. This is the baseline times 100. Times 100, give me a figure. Times 100, give me a figure there. Give me a figure there. 21%. Thank you so much. From there, we have the least right of use. ROU. ROU is right of use arising from leased assets. Right of use arising from leased assets, of which I can see that is 0 divided by 33,600. So this basically is nothing, 0%, like that. All right. Then we have the total figure. Don't omit anything. So in this case here, we have the total there. Yeah. So we have here the total non-current assets. I can see a figure of 16,800. Don't omit anything. Yeah. Divided by 33,600, which will end up giving us what figures, and gentlemen? %, which basically is some of this like that. So then we go to the current assets. So we have here current assets. So current assets, what do we have there? So under current assets, I can see inventory. Inventory, what figure of inventory am I seeing here? 5,600. I will still divide this by the base. Our base is total assets at 3,600. Give me an answer. Times 100, of course. Times 100, of course. 17 for this task. Thank you very much. 17%, 17%. From there, ladies and gentlemen, I will be able to pretty fast pick the next one, which is receivables. Receivables. So receivables, what we have there for receivables? Yeah, 7350 divided by 33,600. Receivables, I can see 7350. 7350, divide this by 33,600, which will end up giving me what figure? 22%. 22%. After receivables, I can see bank. I can see bank. So for bank, what do we have there? 3850 divided by 33,600, which will end up giving me what percentage there? 11%. 11%. 11%. And then they have given me, I don't have to do like total current assets. No. They've just given me total assets. You do for everything given. Total assets, I can see 33,600. So I divide this by 33,600. Then I'll be able to get 100%, which basically will be a sum of everything there. Yeah, 100%. Now from there, we look at the financing section. Financing section, we're looking at the equity and liabilities. But first of all, I want to know whether up to here, especially for the FRA students, are we together up to here? The FRA students, are we together? Great. Thank you so much. Then we go to the equity. Equity, I will begin there with ordinary share capital. So we have equity, please, because of my space, I should have continued there. But because of my space, please allow me to do some abracadabra here. So equity, I can see ordinary share capital. So ordinary share capital. So ordinary share capital, we have 3,500. We are still dividing this by the baseline, which is 33,600 times 1. What figure are we getting there? What figure are we getting there? Yeah, thank you, Basog. At last, I can see you came in and you're dribbling the ball very well. Is it 10 or 10.4? Is it 10 or 10.4? Please don't round off like to a whole number. No, if there's a decimal, you put a decimal. You can be denied a 10.4. Is it 10.4 or 10%? Please don't round off like to a whole number. At the bare minimum, put like 2 or even 1 decimal place. There should be something there. Then we have a revaluation reserve. We have a revaluation reserve. So a revaluation reserve, what am I able to see there, ladies and gentlemen? 1,750 divided by 33,600. So what are we able to get here, ladies and gentlemen? Revaluation reserve. So I'm so sure, even here, you guys must have done a few mistakes because you decided to round off to a whole number. But in an exam, please don't do that mistake. In an exam, you shall round off to, at the very least, 2 decimal places. I think that is clear, isn't it? In an exam, don't give me like whole figures. No, you must round off to some great number of decimal places because of our accuracy. Because of our accuracy. Then, ladies and gentlemen, I can see I have retained earnings. I can see I have retained earnings. So retained earnings, what do we have here? Retained earnings, 5,600. We divide by 33,600. What figure are we getting, ladies and gentlemen, here? 16.7%. Thank you so much. Great. Then we have total equity. You write everything given, huh? Total equity. So total equity, what do we have here? Total equity, we have 10,850. Still divided by our baseline, which is 33,600. Give me an answer. Give me a number there. 16.67%. No, that is retained earnings. 32.3%. 32.3%. After total equity, I can see now you write exactly whatever they have given you there. Non-current liabilities. So non-current liabilities, I can see lease liability. Don't say because it's 0, you won't write it. Write it. 0 divided by 33,600. You're getting 0% there. Then we have 10% loan notes. Loan notes. So loan notes, I can see 15,750 divided by 33,600. Of course, don't forget always 100. So loan notes, what are we getting there for loan notes? Yeah, you see they are giving us a very good question there. So Lillian is saying that this loan notes 46.88 or 0.9. 46.88 or 0.9 doesn't matter. So please remember, when we began, we introduced this topic and we were able to give the rules of the game. We're able to give the rules of the game. Every game has its own rules. If I just share back this handout, we said like this. We will give an example here. We said common size statement of financial position. Each item is presented as a percentage of total assets. Each item. It shows the financial structure and allocation of resources. So you can see, like I gave you a small example here, our total assets were 20 million, and you can see all the numbers are being divided by that 20 million. That's what we are doing. And then PC, remember, for the income statement, everything is to be divided by revenue. Everything is to be divided by revenue. I hope that answers your question, PC. I hope that answers your question. So after loan notes, we go straight away to the current liabilities. I don't have to write the title current liabilities because of space, but you guys, I know you must have completed. So we have payables. So payables, we have 4375 divided by 33,600 equals. Yeah, great. Thank you very much. So payables, then what do we have here for payables? 13%. I hope that's not there. It's not coming as a whole number, right? Otherwise, it is 13.00000. Is it coming as a whole number, for instance? 13.02. Please, we shall write the decimals as well. Great. So after payables, I can see lease liability. Lease liability. Of course, I'm able to see it is 0 there, but I have to write it because of the other company, right? So then we have current tax. Current tax. So current tax, we have 2625 divided by 33,600, which will give us what figure? 7.8%. Thanks, Felicitas. 7.8%. After current tax, I can see total equity and liabilities. Total equity, and of course, this will close at 100%, right? So total equity and liabilities, I can see 33,600 divided by our 33,600 times 100, which will end up giving us 100 what here? 100%. 100%. So, ladies and gentlemen, is that agreeable? Is that now okay with us? Is that okay with us? So will you be able to do the one of CIFA later? Then you do the one of CIFA later, and then now on our WhatsApp group, you present the two numbers. We discuss them. You present the two common size statements. And then if possible, try the question that was brought last semester. Easy peasy, easy things, easy things. I share the handout, yes. Somebody can help me share that handout, please, if you don't mind. Good thing here, I've got very, very good students. Somebody please help me sort out. MJ, help me sort out MJ. Just share this handout. Yeah, thank you so much, Irene. Thank you so much. Great. Now with your permission, I will be able to go straight away to December 2021. December 2021, question number 3. December 2021, question number 3. That one I never saw any importance of converting that question to Excel, because you're not required really to name. I expect you as well to know how to do the conversion. How do you convert PDF to Excel? How do you convert PDF to Excel? So that one I would want to task somebody, in this case who is in the BDA class, to do the conversion of that question to Excel, and then they send it to us. December 2021, question number 3. So BDA students, for the FRA students don't have a problem. BDA students, this is an FRA question, remember. This is an FRA question. So I expect you to go very fast and first of all get the PDF question, and then you convert it to Excel. You resize it a little bit to make it look beautiful, and then you send it in our group. The way I did mine, that's what I did. I will not be there in your exam to be giving you those things. But of course, in your exam, everything will be given to you in form of Excel. Is there somebody who is already doing that? Anybody who could be doing that at the background? Yeah, thank you so much, Linda. Lydia. Yeah, Google, I love PDF, then convert. So Lydia, are you doing that for us? Lydia, are you doing that for us? Is there somebody who can attach that question here? Some FRA student who could attach that question here for us, we shall be really, yeah, question number 3C. Question number 3C. Just C alone. C alone. The only part I want converted to Excel is the table. The table. In the interest of time, you will allow Mwalimu to do it, and then later on, that is our homework. You have to know, because I want you to know how to do the conversions because of what you do at your workplace. I want wherever you guys are working, people should be able to know that students from RCM are geniuses. Yeah, so I'm giving you that as a homework. There are YouTube videos. There are so many resources you can use to study. There's someone to share the question. How comes nobody is sharing this question today here? The FRA students, have you gotten the question paper? FRA, they normally help me a lot. These FRA students, have they gotten the question? Jules, are you able to share them the question here? Please, if you don't mind. If it's in form of a PDF, it doesn't matter. It doesn't matter. So do I go ahead and solve the question and then you guys will be able to do the conversion later? My revision kit is really old. It cannot tally in terms of page numbers. Okay, all right. Someone will be able to help us. Someone will be able to help us. In the interest of time, please allow us to, I don't know why today my grade test of grade students are not even sharing the question. I don't think, I think they haven't eaten lunch. They haven't eaten lunch. They haven't eaten lunch. Yeah, somebody has already shared, yes. Somebody has shared, Lydia. Pius has done it. Pius has done it. So pick it from there. Pick it from there. So we are told here, the following are extracts of financial statements from the books of Zawadi Limited. So I can see sales revenue, abracadabra, everything. I can see extracts of the statement of financial position as at 30th April. So now analyze and interpret the performance and the efficiency of the company for the 2 years ended 30th April 2020 and 2021 using the gross profit margin, return on capital employed, inventory turnover ratio, trade receivables collection period, trade payables payment period. Very easy. Very easy. So basically, we are using this question to teach you how to get, in this case here, ratios. So basically, this is now ratio analysis. Very easy. We start with the first one, which is the GPM, gross profit margin. So gross profit margin, how do we get gross profit margin? Anytime we see the word margin, there must be sales at the denominator, right? So gross profit margin, so this will be gross profit, all over sales, all over sales, all over sales. So let's go ahead and calculate these for each of the 2 years. So we have 2020, and then we have 2021. Very easy. Yeah, so you're getting this GPM. So for 2020, is there somebody who is able to see gross profit? Oh, yes. I can see the gross profit for 2020. Yeah, So it is 103, 812. So 103, 812, divide this by the sales revenue for 2020, 476, 200. 476, 200 times 100. For 2021, you do the same. So even the Excel students, I expect you then to write these answers down, and then you'll be able to do this using Excel later at your own time, in the interest of our time. So we have 117, 902. We divide this by our sales revenue. Sales revenue for 2021, I can see it is 701, 800 times 100. Please give me these answers. Please give me these answers. What do we have there, please? It's only Pius who's giving me these answers. The other students are not giving me any answers. We shall overcome. We shall overcome. We shall overcome. 21.8, right? So 2020, it was 21.8%. How about 2021? Pius is giving me a figure of 16.78%. Thank you so much. That's gross profit margin. Gross profit margin. I'm so sure that BD students are disadvantaged, but in the interest of time, because things must happen. Things must happen. Just allow us even to write it like this, and then later on, you guys will be able to pick it up in form of Excel. I'll be able to send you the Excel later. The Excel later. So then I'll be able to answer number one. Number one, they wanted me to give them gross profit margin. That's number one. And then number two, ladies and gentlemen, they want me to give them ROCE. ROCE is return on capital employed. Return on capital employed. How do we get this return on capital employed? Very, very easy. Whenever I see ROCE, please don't pronounce this as Rose. Rose is my sister. Rose is your mother. Professionally, we pronounce this as ROCE. Whenever I see this O, I am able to remember ROCE return is operating profit. So this is operating profit over capital employed. Over capital employed times 100. Yeah. So anytime you see ROCE, return on capital employed, you take because of this O. Never forget it. So it's not profit after tax. No, it is return on capital employed. You take operating profit, you divide this by capital employed times 100. Now, here, you have to be very, very careful. I would want somebody to remind us that operating profit is the same as PBIT. PBIT, profit before interest and tax. Profit before interest and tax. This extracted income statement, I can see they have given me profit before tax of 50,815. What do you think shall we do to make it PBIT to it? How do we change this 5815 to be PBIT? Because you see, this figure is profit before tax. To arrive at that, they subtracted the interest. Interest is the same as finance cost. Yeah, so to undo that, we add back interest charge. Yeah, so then this one here in this question, this will be PBT plus interest. Plus interest. Yeah, so then this one here will be equal to the PBT. I can see it is 50. PBT, I can see it is 50. 820 plus the interest for this year. Interest for this year, ladies and gentlemen, which is the same as finance cost, is 7,200. Whatever I get, I divide this by the capital employed. 50, 850, 50, 850, 50, 850. Thank you very much. 5850. 5850. But up to here, with this reasoning, are we really together? Because the examiner will try to always play around with your mind. Because he has given you profit before, tax. He has given you profit before tax. And they want it to be profit before interest and tax. Thank you so much. Yeah, all over. How about this capital employed? Please write your own notes very well. How about this capital employed? Again, here you have to be very, very careful. You have to be very, very, very careful. Whenever you hear capital employed, this is the same as net assets. Net assets. Capital employed is the same as net assets. And the net assets will be the same as total assets minus current liabilities. Total assets minus current liabilities. Total assets minus current liabilities. Yeah. So I'll be able to go back and repeat that, but let's finish this and then I'll repeat this. No problem. No problem. No problem. All right. So anytime they want us to give them capital employed, I will always take total assets minus current liabilities. So in this question, have they given me total assets, ladies and gentlemen? Let's see. So in this question, what I can see, I'm able to see the non-current assets for 2020. So for 2020, I'm able to see 1018, 140. These are non-current assets. I have the current assets. Current assets are inventories, trade receivables, cash and the cash equivalents. I can see there are 236, 695. But now, ladies and gentlemen, when I add the two, I will have gotten what we call total assets. And yet, whenever we talk of capital employed, we are looking at the capital employed into just a long term, not long term, capital employed into the long term, yes. Yeah. So remember, out of these total assets, there are current liabilities which will be paid in the short term. So you must always come and take away the current liabilities. Current liabilities for 2020, if you see there are only two, we have trade payables, current tax payable, totaling to 179, 835. So whatever you get here, you should be able to come and multiply with 100. You give me the percentage. As I repeat, give me the percentage. So anytime we talk about capital employed, always remember that capital employed is the same as what here? Is the same as net assets. And our net assets will always be obtained by you taking total assets, non-current assets plus current assets, minus our current liabilities. Yeah, so it is a return on the capital employed. Yeah. And which capital employed are we looking at? It's basically equity plus non-current liabilities. I'll be able to explain that later. We don't want anything to do with current liabilities in this analysis. Yeah. So Mwalimu is saying, Mwalimu, you are moving very fast. Yeah. I'll be able to repeat here. But is there somebody who has been able to pick this concept really here? Anybody who has been able to pick this concept? Anybody who has been able to pick this concept? It's very easy. It's very, very easy. So first of all, we start with this. Assuming you are given profit before interest and tax of say 10, then you are given interest of 3. All right. So you subtract this, you'll be able to get what we call profit before tax of 7. All right. So then this examiner, instead of giving you this, he has given you this interest and he has given you PBT. So the question will be, how do you change PBT to PBIT? Very easy. Because you see, this is profit before tax. It's after interest. So I want you to make it before interest and tax. Yeah. Then what I will do to change this one to before interest and tax, you had subtracted interest to arrive at this. Simply go and add back that interest. You add back the interest, which is 3. So 7 plus 3 will go to give me what here? 10. 10. Yeah. And at times they even give you profit after tax. If they give you profit after tax and you want to get PBIT, what do? You will come and add back tax, and then you add what here? Interest. Because you see, this is profit before interest and tax. So you'll add back tax and you add back interest to get this PBIT. It's a very easy concept, really. Very, very easy concept. So like in this question, they have given me PBT. In this question we are doing here, they have given me PBT. The question we are doing here, they have given me profit before tax. Profit before tax over how much here? They've given me profit before tax over how much here? Profit before tax of 850. And then I want to get PBIT. Then I remember as a finance student that this is after interest. How do we convert it back to PBIT? Very easy. Yeah, add the interest to it. And interest is the same as what here? Is the same as finance cost. So the finance cost there is 7,200. 7,200. So that first of all, this makes now sense. So this plus this, I hope now this makes sense. Yeah, at least Malam has understood. So I hope now this makes sense. First of all, the PBIT. Yeah, great, right? So at least now this makes sense to everybody. Does it make now sense? Does this make sense to everybody? Yeah. Does it make sense to everybody? PBIT. Yeah, great. And please always watch out on this. Very good. Now from there then, I will be able to come back to what we are calling capital employed. So this capital employed, yeah, is the same as what here, or rather it's the capital employed in long-term assets. Capital employed in long-term assets. There are 2 ways of getting this, and I hope you're writing a note somewhere. There are 2 ways. I'll be able to give you a proper structure of writing this, but I want you to take this note down. There are 2 ways of getting this. The first way is you to think about equity and non-current liabilities. So this is what we call capital that is permanent. Capital that will stay with us in the long term. In the long term. So this capital will be what has been given to us by the owners of the business, what we are calling equity, and of course the long-term debt providers. That is the capital that you can talk about having employed. But you can't employ current liabilities. So if I were you, and then I happen to be a member of UDA, automatically I'll be able to write this somewhere and ensure that I highlight this using a yellow colored highlighter. If you're coming from the other side, use whichever color, but most importantly is that you must highlight this is very, very important. That's capital employed in long-term assets. This capital employed can also be looked at from what we call net assets approach. That this capital employed can also be looked at net assets. And how do we get these net assets? It's very easy. You take, in this case here, the total assets minus current liabilities. Yeah, total assets minus current liabilities. And you must know both of them. Like now the question that we're doing here, there's no way you can use the first approach. Most of the questions will be required you to use the first approach. This question wanted us to use the second approach of getting capital employed, which is the same as net assets, which is total assets minus current liabilities. Let me ask you, great students, a question. Have you ever heard of something called working capital? And if you have ever heard of working capital, could you kindly give me the formula of working capital? How do we get working capital? How do we get working capital? Somebody, today I don't have my phone here. I think for the last 2 sessions, I've already given you money. I need to go back. Yeah, so you can see this ninja called John Mburu. He's saying it is current assets minus current liabilities. That formula has a lot of resemblance with this one. When it is working capital, you take current assets minus current liabilities. But when it is capital employed, CE, capital employed, you should always take total assets minus current liabilities. Yeah, so this is really, really important. And for the year 2020, if I come here, I have to make work easier for you. Are you able to give me CE, capital employed, for the year 2020? Yeah, so for the year 2020, how do we get our total assets? It's very easy. I can see total assets. I can see current assets. First of all, non-current assets, they are 1018, 140. Plus, we have other assets called current assets. And the current assets for 2020, I can see they're coming to 236, 695. So these are total assets. We take away the current liabilities. Current liabilities, which are 179, 800 what year? 835. That way you will have gotten your current, not current, but capital employed for 2020. Yeah. So I want to believe that now all of us must be very comfortable with ROCE of 2020 and ROCE of 2021. So are you able to give me the percentages now? ROCE 2020, ROCE 2021, and then we argue out. And please feel free to ask questions. Remember, I'm your chief ninja. You shall never fear chief ninjas. You shall never fear your father. Fear everybody else, including your mother, but you shall be very free with your older man. Yeah, we are good people. We are good people. So feel free to ask questions. I know that's arguable, but your father is supreme. There is not a single day when your father has ever come to you telling you that your mother is bad. Your mother, no. We always die with all our secrets. But your mother has come to you like even thrice, even 5 times, telling you how bad your father is. True or false? We shall overcome. We shall overcome. We shall overcome. We shall overcome. So 2021, I'm being told in this case it is 2.8%. 2.8%. 2.8%. 2021. 2020 is 2.8%. That's from Jules. Great name. Don't know whether I'm pronouncing it well. It's a great name. But now most ninjas are not giving me these values. Most ninjas are not giving me these values. Put my book down. Yeah. Remember, we are not using current assets and current liabilities for 2021, okay? But first of all, give me this figure. Is there somebody getting ROCE of 2.8% in 2020? Yeah, somebody is confirming that. No, they're saying it's 5.4. Cyprian is saying no, and I like those kind of students who will always give us their opinion. It doesn't matter whether they are right or wrong. 2020, they're saying it's 5.4. 5.4. This one here, they're saying it's 5.4. You can see Cyprian, you're right. How about 2021? How about 2021? Okay, so I was mixing up 2.3. Are we comfortable, all of us, with the 2 figures, or would you want Mwalimu to do one of them? Is there a figure you would want Mwalimu to do, or are we comfortable? Those figures are correct. Good. Felisa says good. Do one. So I do like 2021, right? I do 2021, right? Okay, let me do 2021 pretty fast then. So 2021, ROCE for 2021. So ROCE for 2021. So first of all, give me the PBIT for 2021. So PBIT, they have given me profit before tax for 2021, 42,960. But now we add back interest. We are adding back interest, which is 10,800. So are you able to give me this answer? Are you able to give me this answer, Angie? Yeah, PBIT, because they have given me profit before tax, so I must add back interest. So this is 53,760. 53,760, like that. And then give me the capital employed in 2021. So the capital employed in 2021, what do we have there, ladies and gentlemen? I hope you are able to see 2021. We have 81,500. These are non-current assets. Add the current assets for 2021, which are 335,500. 335,500. And then you take away the current liabilities, 297,000. So somebody give me this figure. 1920,000. Beautiful figure. And then now remember that ROCE really is the quotient between this PBIT, 53,760. We divide this by the capital employed, 1920,000 times 100. So then are you able to give me these figures, 2.8? So I believe now, Angie, you're able to pick that one for 2021. Position 1, great. Thank you. Thank you so much. 2.8. Now, there we are okay, all of us, isn't it? Now, there we are okay, all of us. We are okay, all of us. Thank you, Angie. And Angie has confirmed. Thank you so much. Now, then we go to the next one. The next one, number 3, they are talking about inventory turnover. Inventory turnover ratio. Inventory, no, not ratio, period. Very, very different. Period. Very, very different. So this is normally how I remember the formula for inventory turnover. So you see here, there is like an over. Yeah. Inventory over turnover. Inventory over turnover. But now I'm a bright student. Yeah. Being a bright student, I know that we don't find inventory in sales. No. Where do we find inventory? We normally find inventory under cost of sales. Because under cost of sales, we normally say it's opening inventory. Yeah. We add the purchases. Yeah. And then we less closing. So in short, inventory is normally found under cost of sales. It is not found under sales. So whenever it comes to me writing, remember this is never there. I just use this to figure out. So then whenever we have this kind of an arrangement, what I will do, I will come and write the formula. So I will take here inventory, but now, you know, it's supposed to be inventory over sales because turnover is sales. But now you remember that inventory cannot be in sales. So what I'll do, I know inventory will be under cost of sales. So inventory over cost of sales times 365, because they have told us period, and you must be careful of the number of days in the year. The examiner will dictate that for you. So like now in this question up there, he has told us to assume a 365-day financial year. So this is normally how we calculate inventory turnover. It is inventory over turnover. Inventory over cost of sales times 365, period like that. Yeah, a good student there is asking whether we consider what we call average inventory. Good question. Now, you see, as you progress, you reach a level where they are telling you, hey, calculate for us, in this case here, inventory turnover period for 2021. All right. Then that case here, then I will be able to look at what we call average. What was the closing inventory or opening inventory 2021 and the closing? Then we add the 2, we divide by 2. But you see, in this question, this particular question, they want us to analyze and interpret the performance and the efficiency of the company for the 2 years, ended 30th April 2020 and 2021. So you're looking at these years in isolation. Good question, shall be coming to that. Here we are looking at these years in isolation. So don't average nothing. Don't average anything here. So come and give us these figures. We have 2020, 2021. So are you able to see in inventory for 2020? In inventory for 2020, the students, are we together really? In inventory figure, go to current assets, pick inventory. In inventory, how much do we have there under current assets? Pick in inventory. 81,000. Out of the cost of sales 2020. Are you able to see the cost of sales in the income statement given? Cost of sales. Please go to the income statement given 2020. Cost of sales 372 something, right? I have to get this from you. Fortunately or unfortunately, you must write it down for me to see. Yeah, you will be able to get it, yes. 372, 388. 372, 388 times 365 days. Could you kindly give me this inventory turnover period? 79.39 days. Thank you. Go and do the same for 2021. 2021, look for the inventory. Inventory 2021 is 81,400. 81,400. You divide this by the cost of sales 2021, which is 583, 898, 583, 898 times 365, which gives us a what figure? 50.88. Thank you so much. 50.88. We are over with that. We are over with that. Then after that, ladies and gentlemen, with your permission, I'll be able to go ahead and calculate the receivables collection period. So number 4, receivables. Receivables collection period. Receivables collection period. Receivables collection period. Yeah, somebody. Yeah, write in decimals, yes. Write in decimals, yes. Write in decimals, yes. Write in decimals. So receivables collection period. So I'm waiting for you great students to try even giving me the formula. We see whether you will be able to get it right. Receivables collection period. Ladies and gentlemen, this one is just very, very close to whatever this period thinks. They are very close, similar. So then here, I will take receivables, what I expect to receive. But now remember, what I expect to receive is a function of sales. Yeah. So I can't say divide by cost, so it will be sales. And with sales, to be precise, it is the credit sales. Credit sales times 365 days. This will become clearer as we progress. Thank you so much, JDS. Oh, they want us to send the question. Somebody send this question. Somebody send this question. Please, somebody send this question. We can't progress without you giving us the question. We can't progress without you giving us we will not progress. Give us the question. Give us the question. And remember, if you're already given the percentage of credit sales, whatever sales is given there shall be assumed to be on credit. Yeah, inventory, go for the closing one. Yeah, the closing one. The closing one. So receivables, 2020, they don't have question. I don't know whether I should proceed or I should give them some time. We cannot proceed really. They don't have the question paper. They don't have the question paper. They don't have the question paper. Somebody can just take a snapshot of this question and then they send it to us. We shall be happy. Pius, somebody has tagged you there. Thank you so much. Thank you so much. Thank you so much. So let's go slowly here When you guys now give me the receivable collection period, the receivable days, at times they call it the receivable days. The receivable days. At times they call it the receivable days. Receivable days. Receivable days. So they're giving me a figure of 73. They're giving me a figure of 73. 73. 73. Yeah, 73. And then the other one is 91. 73. And then the other one is 91. Yeah, great. So remember, in terms of receivable days or receivable collection period, you take the receivables. Receivables, I can see there in 2021, we had 95,240. 95,240. 95,240 divided by the entire sales, which happens to be on credit, 476,200 times 365. So then this one here will end up giving us 73 days. How about 2021? 2021, ladies and gentlemen, I can see my receivables there are 175,450. 175,450. We divide this by the credit sales for 2021, which in this case here are 701,800. 701,800 times 365. How many days do we have here? 91.25, right? 91.25 days. Felicitas is giving me 91.25. 91.25 is now getting traction. Great. 91.25. 91.25 days. Thank you so much. So we go to the very last one, unless there is a question. Please feel free to ask questions. So in this case here, after that, do we have any other one? Yes. They want me to give them the trade payables period. The payables payment period. Or basically payable days, They call them like that, payable days. Please write for me the formula. We see whether you guys will be able to get it right. Yeah, thank you so much. Irene already has been able to pin this down. Yeah, so here I will take the payables. And I know for payables, what do? We purchase, then we do what here? We pay later. So these payables must be compared to the purchases, not cash purchases, the credit purchases. And then, of course, whenever purchases is not given, when you can't be able to figure it out, you shall always assume that it is the cost of sales. It is the cost of sales. You know, you go to a questionnaire, they don't tell you how much the purchases was. So they don't tell you how much the purchases was. Then down here, use the cost of sales. Use the cost of sales. Yeah, I'm getting approximately 109 and 120 something, 127, yes. Thank you so much, Pius. Thank you so much, Pius. Thank you so much. That is really kind of you. All right, so we have here 109.49, 127.75. How about the other students? What are they able to get? The other students, what are they able to get? The other students, what are they able to get? Remember, you have been given the total payables. For 2020, we have the payables there as 111, 715, all over 372, cost of sales, that is 388 times 365. This is how this gentleman called Pius was able to get 109.49 days. And then we have 2021. 2021, what do we have there? We have a payables of 204,365. 204,365. Divide this by the cost of sales of 2021. 583,898. Yeah, actually, what I'll do in the next session, I will now be looking at the interpretation bit of it. For now, let's just understand the computations. 898 times 365. This is what they did to be able to get the 127.75 days. Great, 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 great. So are we comfortable with these computations, all of us, ladies and gentlemen? Are we comfortable with these computations, all of us, ladies and gentlemen? Yeah, and I would want to get feedback from the respective classes that we have. The BDA students, BDA, now I'm asking the BDA students. Have you been able to follow BDA students? Because I know you'll be able to put this in Excel later, but have you been able to follow BDA? BDA, yes. Thank you so much. How about in this case here, the FRA ninjas? FRA ninjas, are you still with us? All right. So somebody in this case here wants us to advise on the cash conversion cycle, the one that we do in FM. Yeah, where you have in this case receivable days, inventory days, and then payable days negative. Yeah, please allow me not to go into that because it's not within our scope here. Yeah, we should overcome. We should overcome. Great. Thank you so much. And if you allow Mwalimu, then I will be able to do the last question for today. The last question for today. I hope they still have some energy. I hope they still have some energy, where we simply look at the computations. And then when we come to our next class, then we should be able to do what here? We should be able to go to the interpretations bit of it. All right. All right. Yeah, the question of Supercars Limited, which is April 2022, question number 2. 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 Unfortunately, now we will go to struggle with getting the question paper. But with people like Pius around, I'm so sure someone will be able to pick it pretty fast. Pretty fast. They give us this question, April 2022, question number 2. And then what I expect from the BBA students, now later on, you will be able to get into your past papers, pick a few questions from this area, get into your discussion groups, discuss them, and then you are done with that topic. You're done with that topic. Very well. So April 2022, question number 2. April 2022, question number 2, question number 2. Question number 2. All right. So by any chance, is there somebody who has been able to get this question on Supercars Limited? With reference to the industry ratios, compute the equivalent ratios to Supercars Limited for the year ended 31st December 2021. So they want us to give them return on year-end capital employed, net assets turnover, gross profit margin, I can see it there, current ratio, very easy ratios. I'll get all the marks there with my eyes closed. With my eyes closed. So Bwana Pius, are you able to send us the question here pretty fast? Yeah, so Pius has been able to send it there. All right. So please, once you download it, then put your thumbs up like this, Mwalimu, to start doing it. So do we have some students in this particular room who come from Rwanda? Any Rwandese students we could be having in this virtual session? Rwanda, somebody coming from Rwanda. Adama, okay. Wow, Abiba as well. Great. How about the mighty Tanzania, Arusha? Arusha, I'll be in Arusha for 2 weeks starting tomorrow. Arusha. Basoga is coming from Arusha. Kenyan, okay, that is Kenyan, okay. Yeah. So I'll be in Arusha for 2 weeks, and I would like to meet our students. I'm looking for guys from Arusha, Tanzania. So now I'm doing the East African, the East African trip. Now that I've finished auditing, nataka nipatie mwili pole. Nipatie mwili pole, nianza na Arusha, nizunguke Rwanda. I should have come last week. We should overcome, okay? We shall overcome. Great. So which basically is a very good thing, meaning that RCM is a regional college. And because of the virtual classes, I'll be able to teach my classes from those respective countries. Great stuff. Initially, I could not move around like that. But now with this Zoom thing, it's giving us possibilities. Kutembea pamoja, we shall overcome. I have my young PA, young man. Yeah. And then of course, we shall overcome. I have to go around with family. But of course, as soon as I get there, I'll be able to buy them lunch. Yeah, I'll be able to buy them lunch. And like the Arusha students, I'm buying them lunch at the famous Sheraton Hotel. Yeah, great. And the BDA students, I've not bought them lunch. At least FR students, I bought them lunch at Sarova Stanley. BDA, yeah, this semester, FR students, I bought them lunch at Sarova Stanley. BDA students, I don't know when we should eat this lunch. BDA students, I don't know when we should eat this lunch. The sooner the better. When I come back, right? When I come back, yeah, I told yes, BDA not yet. We should get our special lunch. The sooner the better. The sooner the better. Great. Yeah, tukuja Kisumu, Oh, some students, FR students are not joined. But unfortunately, it's only once for every class. So you can't repeat that. Basoga now that has left, it's a train already gone. Yeah. So in this case here, Machakos. So somebody is inviting me to Makueni. Makueni County must be very good, right? Makueni County must be very good. Makueni County must be very good. Which reminds me that our mighty ninja, Kivuda Kibwana, will be coming to speak to our students very soon. Actually, I've delayed with that. Is willing to come and talk to our students on matters of integrity. So I read here, Supercars Limited deals in car accessories. Roughly 75% of sales are on credit. You see, they have told us the percentage of sales which are on credit, while the balance are on cash sales. Supercars Limited engaged an analyst who extracted the following summary of industry ratios. So underline their industry ratios. So we have return on year-end capital employed, 28%, 28.1%. Net assets turnover 4 times. Gross profit margin 17. Net profit margin before tax. Current ratio, very good. We have closing inventory holding period. We have trade receivables collection period, trade payables payment period, dividend yield. I like this. Whenever you hear of anything called yield, Please, anytime you hear of yield, like now when they tell you anything to do with yield, know that at the base we have market price per share. Market price per share. So if they talk about dividend yield, then it will be DPS over MPS. Very easy. Dividend per share over market price per share. When they talk about earnings yield, this one here will be earnings per share over earnings. So anything is yielding, it yields to market price per share. Never forget this. Market price per share. You can forget about everything else, but never forget this. Never forget this. Great. Great. So you should be able to go to Machakos, Makueni, etc. Jules. This one I'll send you photos on the FR group for you to see that we did this. We did this. Yeah, we've already done this. All right. So then you can see Supercars summarized financial statements for the year ended 31st December 2021 are as provided below. Statement of P&L and a statement of financial position provided. Note 1, Supercars Limited received 600,000 from the sale of plant that had a carrying amount of 400,000 at the date of its sale. The market price of Supercars Limited shares throughout the year averaged 375. There were no issues or redemption of shares or loans during the year. 4, dividends paid during the year ended 31st December 2021 amounted to 450,000, maintaining the same dividend paid in the year ending 31st December 2020. So with reference to the industry ratios, compute the equivalent ratios for Supercars Limited for the year. So basically, they want you to come and compute ratios for supercars following the format given. Yeah, for the industry. So ratios of supercars are. These are good exam. CPA is a good course. Best course ever. Great. We shall overcome. We shall overcome. We shall overcome. We shall overcome. So we have, ladies and gentlemen, so in this case here, supercars ratios. So we have here return on year and capital employed. It is simply ROCE. How do I get ROCE? It is PBIT, it's operating profit, over capital employed, times 100. Don't say times 365. This is not period. When we mark these papers, nobody see great things. Yeah. So PBIT over capital employed. So please go to your profits, profit statement, pick the PBIT. Yeah. So I'll wait for you guys to give me the answer for PBIT, for supercars. For supercars, what is our PBIT for supercars? Irene, 1,000. Irene is saying 1,000. Wrong. So yeah, great. Because whatever they have given me is PBT. So when they give me PBT, I must add back what here? I must add back interest. Because what Irene is giving me there, over 1,000, is profit before tax. So it is 1,000 plus interest. Interest over how much? Are you able to see the finance cost? 100. Yeah. So Irene, I believe you'll never forget this now. Is that okay? I believe now these are sunk permanently. Which are the industry ratios? PC, they are given. I even told you to underline from the beginning of the question, first paragraph, beginning of the question, Supercars Limited deals in car accessories. Roughly 75% of sales are on credit, while the balance are on cash sales. Supercar Limited engaged an analyst who extracted the following summary of the industry ratios. So PC, are you able to see the industry ratios given there? The first one is ROCE. they have created for you those ones. Now they want yeah. So that is PBIT. How about capital employed? How about capital employed? How about capital employed? Let me see whether you'll be able to get the capital employed. We just give you, oh, we don't have time. Time is not on our side. Time is not on our side. Ah, great. I was trying to see whether I have M-Pesa, good M-Pesa. You know, now these students of mine want good M-Pesa. They don't want like 100 shillings. They don't want like 100 shillings. They want serious money, like a 2,000. These great students of mine, they like good money, not bad money. Yeah. Great. So are they able to get these figures? Let's see. So couple employed. How do we get this couple employed? It's very easy. It is total assets. Total assets minus current liabilities. Like that. So total assets, what do we have there for total assets? Total assets, are you able to see the total assets, ladies and gentlemen, for this question for super? So for super, the total assets are 5,800. How about liability section? Are you able to pick the current liabilities? Liability section, current liabilities, oh, I can see these ones are how much? Yes, about 2,400 years. Because we have trade payables, current tax, bank overdraft, 2,400. So when you subtract this one minus this one is what they're giving me as 3,400, isn't it? Is what they're giving me as 3,400. All right. And then remember, we have another method. This is method 1. Is there somebody who was able to use method 2? Method 2. So method 2, the current capital employed, I mean, will it be all equities? All equity plus, in this case here, non-current liabilities. So you go to the equity section. Equity section, you can see we have ordinary share capital 500. We have some reserves there, retained earnings 1,900. That is all. And then you go to the non-current liabilities, where you're able to see 8% debentures of 1,000. Over 1,000. So then are you able to confirm that this will give us 3,400? Yeah. Thank you, Felicitas. Yeah. Method 2, you take equity, because we are looking at the long-term source of finance. This is permanent. This long-term source of finance, we don't bring in current liabilities. That's why we deduct current liabilities from this. Yeah. And then you can come back and substitute here. So the PBIT is 1,100 all over. Method 2, we can see we have 3,400 as capital employed times 100. That one will end up giving us what percentage? 32.35. 32.35%. So I happen to be having another class starting at 4 p.m., ladies and gentlemen. Of course, I will be giving you this video. Yeah. And should you get my videos anywhere, if it's on YouTube or wherever, always share them. Make a comment. Share them, make a comment. Otherwise, thank you very much. Much love to you, great guys from this great Chief Ninja. Bye. DBST, we'll talk about that in your group. Yeah, we'll talk about that in your group. We shall overcome. Thank you so much. Bye.